The Public Investment Corporation is seeking a panel of turnaround specialists to stabilize its multi-billion rand unlisted portfolio, and that's according to Business Day. The move comes after sustained underperformance, particularly in its property division, which prompted the Government Employees Pension Fund to temporarily withdraw its mandate. The panel will include turnaround professionals, business rescue experts, liquidators and property specialists tasked with evaluating troubled assets, reducing losses and recommending long-term restructuring plans. PIC CEO Patrick Dlamini, known for his track record at the Development Bank of Southern Africa, will oversee the process aimed at returning the portfolio to stability while maintaining strategic focus on transformation and socio-economic impact. The S&P Global South Africa PMI has held steady at 50 in February. This marks the second month of broadly stable private sector conditions. That's after some weakness in late 2025. Looking at the detail for the month, output was unchanged, supported by firms clearing backlogs, but new orders edged lower and outstanding work continued to decline, pointing to a softer pipeline, and business confidence slipped to its lowest level since July 2021. Business sentiment has continued its upward trend. The RMB-BR morale indicator rose by 3 points to 47, building on the improvement in the previous period. Now, the index sits at its highest level in nearly 5 years. That uptick's been attributed to an encouraging State of the Nation address, as well as continued stability of the GNU ahead of the budget. RMB's chief economist, Zam Hlanga, says the print is encouraging, but he has warned that many respondents continue to flag operational challenges at local ports and that geopolitical developments, largely beyond South Africa's control, also remain top of mind for many businesses. President Ramaphosa's mirrored those concerns. While addressing the African Energy Indaba in Cape Town, Ramaphosa noted that the world was in a period of heightened volatility in the global energy markets amid geopolitical tensions, and that's putting strain on Africa's supply chains and causing higher energy prices. The head of state says this sharpens the case for regional and continental energy security, diversification, and self-reliance. Woolworths has rung up higher half-year earnings, with headline earnings per share ticking up close to 10%. That's thanks to strong demand for its upmarket food products over Black Friday and the festive season, and the revamping of its fashion units. The retailer says the results reflect the ongoing progress in various strategic initiatives, but gross profit margins across Woolworths' businesses have come under pressure. That's due to a combination of long-term capacity investment, stronger growth in lower margin categories such as online shopping, and increased promotions to clear excess inventory. An interim dividend of R1.18 per share has been declared, and that's up just over 10% on the previous period's payout. Quilter has delivered a strong full-year performance, reporting record net inflows of £9.1 billion and an adjusted profit before tax of £207 million, which is up 6% from last year. Operating margins improved to 30%, while the group's assets under management and administration rose 18%. Quilter is returning up to £100 million to shareholders through a new share buyback program, alongside a proposed final dividend of 4.3 pence per share, taking total dividends to 6.3 pence. CEO Stephen Levin says the results reflect the strength of Quilter's dual distribution model and the momentum across its affluent and high net worth segments. Cashbuild has posted interim revenue growth of 3%, with transaction volumes up 4% in the 6 months to date December. Headline earnings per share climbed 18% as gross margin expanded to 25%, even though operating profit edged lower. 5% lower, that is. Now, cash generation strengthened, supporting a 21% increase in the interim dividend to R3.93 per share. Management says trading conditions are expected to remain challenging, although revenue in the first 7 weeks of the firm's second half is running 8% ahead of last year.